Crude at $72, it's very difficult to justify a long-term sustainable bull market. We can draw this parallel and say, okay, crude and Indian markets have this historical correlation, but it's not going to be a very linear move for Indian market. So we cannot brush aside the movement in crude, and that is going to be capping the market upside. That's my limited view.
Well, Saudi is calling $100 on crude. We've already told our viewers how the Aramco IPO is likely to add to the supply side constraints that can push oil prices higher. But it remains to be seen. The supply glut is likely to be influenced by oil producers beginning to reduce supply, which they did from Jan of this year. Supply cutting pact extended until December 2018. Oil producer meet in June is to review that situation, but be mindful. Being one of the key influencers of where oil prices go, Saudi Arabia can, in a way, make sure that prices indeed go up. Azleen Ahmed, the editor Crude Oil Markets, joins in with a quick perspective on what's brewing as far as the oil market goes. How high is the possibility that oil could be well on its way to 100, Azleen, at this juncture?
I think it's a very slim chance in the very short term, unless something unexpected happens in terms of the supply, if Saudi Arabia is drastically cut. Or the one thing that is uncertain still is Iran. Basically, what the U.S. or President Trump plans to do with Iran. I think that's something that the market is watching for. So, I mean, there's a possibility that that prices could go a little bit higher if President Trump decides to impose sanctions on Iran or not to continue the nuclear agreement. But fundamentally, I think that oil prices have already gone quite high. There is a geopolitical premium right now that is keeping Brent prices above $70. And I think that it's going to be very hard for prices to go to $100 anytime in the next few weeks.
Azleen, when crude was at $50, nobody anticipated crude would go to $70. The general base case scenario was that every time crude will go above $50 or $60, shale gas would come in again. So where are all those proponents of shale gas, and how come at $70 also we don't see any evidence of supply coming from that frontier?
Well, I think that our view is that the U.S. shale production is going to be the main factor that's going to cap oil prices. And I mean, I think you can see that the shale production has continued to rise. The expectations is that by the end of this year, or even before the end of this year, U.S. production will exceed 11 million barrels per day. And that basically will overshadow or exceed the production of Russia and Saudi Arabia. So U.S. shale production is continuing to rise. There's no doubt about it. It may not be as fast as we saw last year, but it will rise. And I think that we have to realize when the recent increase in oil prices, fundamentally the market has tightened for sure, because OPEC cuts in January, February, and March were very good in terms of complying with the output cuts, and the cuts in March were record high. So that was very good. And as the IEA said, the stocks, OECD stocks, is coming down close to the 5-year level, which is what OPEC aim to achieve. But I think we have to realize that right now, oil prices is supported by tensions globally. There's a lot of tensions between U.S. and China, U.S. and Russia, U.S. and Iran. So all that has added to the oil prices. And I think that the market, based on pure fundamentals, would not be at $73 for ICE Brent.
Azleen, that makes sense. Thanks very much for joining us with that quick perspective.